Hey guys, I want to answer your questions and objections about the credit spread trade ideas algo. Now, there's a lot of people who want to know the specifics and nitty-gritty details about it, and that's what I'm here to share in today's video. If you're someone who just goes, okay, the win rate's good, I need to collect this much money, and this is how I trade, and I'm going to win and make money long term, good, do your thing, don't watch this video. I do not want this video to confuse people. These are for people who like knowing the specifics, and mainly for people who overthink and analyze. Remember, when you do that, it makes it harder to trade because you're thinking about so many different things. But if you want to know the specifics, here they are. All right, let's dive into the trade ideas algo. How does it work and what is it based on? Well, this algo relies on a proprietary trend following and mean reverting trading system. What does this mean? It means that when we look at the market can either be doing one thing, going in favor of a trend. It has to be going in some direction, right? And so we do that by predicting that using a normal distribution type of curve. And so we see that here when the market's above this green line, it's trending up. When the market's below the red line, it's trending down. So we do put credit spreads here, which make money up. We do call credit spreads to the downside. When it bounces at a yellow line, that is mean reverting. That means that it's going to slow down or reverse. So when we hit here, you can see it kind of slow down and started to reverse. So if it hits this, then we do put credit spreads to make money on the way up. And vice versa on this side. If the stock starts hitting the top of the yellow lines, we know it's going to slow down and probably reverse, so we get on call credit spreads to the downside. That is how this works. All these strategies, step by step, are laid out in my free trading hand guide linked down in the description below. So if you want to know the specifics behind these strategies for free, what you need to do, when and why, that free trading guide is down below. Okay, then what it does is this algo takes all these strategies I just talked about and converts them all into easy to follow trade alerts. It goes, all right, this stock, this strategy, this is the alert, this is the expiration date you need to pick, this is how you put credit spread, this is the credit you want to collect, this shows you your historical win rate, this shows you your analyzed return, and this helps you place trades and tracks the trade, etc., whatever. But what it does is take these strategies that I've shared with you and it makes them super easy to follow and in real time. So you can see these, just check them in 5 minutes, be like, oh, is there a trade today? Cool, I want to take that. If not, move on. Anyway, this is literally the best credit spreads trading algo in the world right now, I dare say it, because it works and helps our members generate profits, and it only takes 10 minutes a day, or 10 minutes a week even. Okay, now again, if you want to view the historical backtest for yourself, because we'll be kind of going through that here in today's video, you can go, I made it public, you go to https app.10%creditspreads.com/report. You can see it for the $1 width, the $2 width, and various other different stocks. So again, if you want to see what each strategy returns and how it's been since 2005, you can view that here before we get into the specifics. All right, objection number one that I've gotten from some new people and members as well is the backtest doesn't use historical options data, so how can it be accurate? Okay, so again, we're referencing this, which shows it gives you the return that it's expecting based on each one of the returns and what it's done historically, and all these returns come together to create our annualized return and win rate. So let's keep this backtest in mind when we're going through these questions. Okay, so if the backtest doesn't use historical options data, how can it be accurate? All right, well, here are my points. This is true. This algo and historical backtest does not use real options data, right? So I currently don't have access to historical options data, but I do have stock market daily data from a reliable data provider. I use the information from the data provider and VIX data, which is volatility data, which I'll explain why in a second, from the Chicago Board of Exchange. It comes straight from them. So both of these are super reliable sources of information to calculate an accurate spread price using the Black-Scholes pricing model. All these returns and losses you see on the historical data or the historical backtest is based on the spread price determined from the Black-Scholes pricing model. This is a pricing model started in 1973. It's used by most financial firms, and this is just a reliable approach to options. Again, there are some caveats, but we'll be covering that here soon. The historical win rate is based on the idea that a stock will stay above or below a certain strike price, and that win rate is not affected by the options price. Let's break this point down because this is important. The win rate you are seeing on these back tests are not based on the options price. Historical options pricing does not matter for the win rate. Why? Because all we're looking at is, hey, will this stock stay above this level by the end of this date? And we're just trying to find patterns like that in the stocks to determine these win rates. So all these win rates are based on patterns and reliabilities. So again, the win rate is not affected by the fact that we do not have real historical options pricing. All right, using this win rate, which is not affected by options prices, we can determine the minimum amount of credit required, which I'll go into in a bit. These strategies are stock heavy and used to determine patterns for stocks. Then we use options to take advantage of these probabilities. So the question here, the backtest doesn't use historical options data, so can it be accurate? Yes, it can be. The win rate is 100% accurate. We're using stock data that is consistent, that is reliable. We're using volatility index to determine options pricing from VIX, but all this, anyways, it is accurate. Let's dive into some other questions though. Objection number 2, the Black-Scholes pricing model ignores dividend and assignment risk. So does this affect the algo's win rate? This is a great question. The algo's win rate, once again, is based on stock data and stock patterns, not option prices. The win rate is, will the stock stay above this level or below this level by a certain date? You don't need options data to determine the win rate of that. Since all that is based on stock historical data, which I have accurately from reliable stock providers, there's nothing you need to worry about. The win rate is intact and correct and accurate. This means the win rate of the algorithm isn't changed based on the options price or the Black-Scholes pricing model calculated price. The stock data that I have and this algo uses also factors in dividends, stock splits, reverse splits, news, etc. So all that is already factored into the win rate. Like, well, is my win rate going to be affected when FOMC news comes out, when interest rates rise, decrease, whatever? Yes, this is all already accounted for. Number 3, regarding early assignment risk, the Black-Scholes pricing model assumes that you can't be assigned early, and the early exit rules I created for the algo eliminates the early assignment risk to virtually nothing. So yes, okay, I'll just jump to the next step. The Black-Scholes pricing model assumes a lot of different things. In order to determine an accurate options price, you need to assume a few things. So you need to assume no dividends. So again, we need to assume that there's going to be no dividends for this stock. Each time I calculate the Black-Scholes pricing model for this algo, it assumes what is happening in that moment in real time. So if there's a dividend, it will factor that in. If there's not, it won't. So you don't need to worry about that assumption. Next, random markets. Yes, the markets are random. We don't assume we can predict it. We're just looking at trends. So yes, that assumption holds. No transaction costs. Yes, the Black-Scholes pricing model does not factor in transaction costs into the options price. But guess what? In the historical backtest, I factor in commissions for each spread you put on. So I am already factoring in the transaction costs. So that assumption, you don't need to worry about it. Risk-free rate and volatility known. Yes, it assumes these are constant when you're calculating Black-Scholes pricing model, but because I have the VIX data straight from the Chicago Board of Exchange, which is where that data comes from, I can have an accurate volatility measure so I can accurately create these option prices or predict the current option value. Next, it assumes returns are normally distributed. This is just mathematically correct. And no early assignment risk. As mentioned here, there is an early assignment risk in the options world. But if you follow the rules I created and put around this algorithm, guess what? You don't need to worry about early assignment risk because it goes down to virtually nothing. I've explained these in different videos and different blog articles. If you want to learn more about that, go and check that out. Most of the assumptions are accounted for, as I just explained, in the algo and using various rules. But you are right in the fact that option prices we calculate aren't always 100% accurate. but that doesn't affect the win rate. And again, it may not be 100% accurate, but we are 99, if not 99.9% accurate in our option price calculations. Objection number 3. Not all the trade alerts can be entered. So does this affect the win rate and return? Once again, amazing question. The algo's win rate is determined by historical stock prices and is used to determine the minimum credit to enter the trade. So let's talk about this. Why does this matter? Well, like we said, the win rate is based on historical stock data, which we know across the board is accurate here. We're not using calculations, we're not guessing, we're not doing anything. We know the historical stock data. We know that our win rate is accurate because of that stock data. Now, how do we determine our long-term win rate? This is called positive expectancy, aka a profitable strategy, must be over 0. And the higher above 0, the more successful the trading strategy. I've covered this in numerous videos. So what is the formula for a profitable strategy or positive expectancy? It's the win rate times your profit minus the loss rate times your loss. So let's take a generic strategy. Let's say our strategy that we're using here with the algo has a 90% win rate, and it wants you to collect at least, or you're able to collect 15 cents. Okay? So if you can have a 90% win rate and collect 15 cents, that means that you have a 10% loss rate and you'll lose 85 cents per trade. Just that's how spreads work. That means you'll have a long-term positive expectancy of 5. Or because each options contract represents 100 shares, that means you're going to make long-term $500 over 100 trades with a $1 Y. That's kind of what's expecting. So if the win rate is 90%, then we should aim to collect a 15 cents for $1 Y. We can also collect 14 and 13 cents and still make money. But if we want to make the most money, let's try to collect 15 cents or more. Okay, that means you shouldn't enter the trade if you can't collect around 15 cents. Why? Well, because you want to have this long-term positive rate, which again is based on a win rate, which we know is correct with this algo. This means, very rarely, the Black-Scholes pricing calculation will be off or show that you can collect the minimum when you can't. This deviance from the actual spreads price can cause the historical return shown on the backtest to be a bit off. However, the calculation is rarely, and again, I'm guessing less than 1% off, if you are collecting a credit that will result in a long-term positive expectancy, then you don't need to be concerned. So a lot of people are like, okay, Austin, it shows in the historical backtest that it was able to collect this, but I was only able to collect, it was maybe 2 or 3 cents off, right? And so again, you'd be like, Austin, does that affect the long-term actual return, not win rate, because we know the win rate is consistent? Well, if we're just looking at that, yes, it will differ from the historical annualized return that it shows. However, all we're looking at is this positive expectancy. We know the win rate is correct. We know the loss rate is correct. Can you collect a profit and thus a loss that will end in a positive expectancy? If so, then it doesn't matter what you're doing or what the Black-Scholes pricing model is pricing it at. If you can have a positive long-term expectancy, you're going to make money with this program, and that's how this algo works. So if you're collecting a credit that will result in a long-term positive expectancy, then like I said, you don't need to be concerned. I am currently contacting options data providers as we speak to integrate this into the algo and make the backtest more accurate. However, it is currently as accurate as mathematically possible, so there's no need to worry. This is a very small issue. We're talking less than 1% of the time is this an issue. And 99% of the time, you're able to collect the minimum credit. You're going to make money, and it doesn't massively affect the win rate or your long-term rate because, again, we've already covered the specifics of that. So, again, I don't want you getting lost in the minutia and all the specifics and all the details. I just want you to understand this is math, this is working, and this is how you're going to make money. Don't get caught up in the details. This is the best thing we have right now. But it's always getting better, and that's my goal. Objection number 4, how long have I been trading this algo, and do I have account statements? Well, it's currently the end of July, just for reference, and I've been trading this strategy since March 2023 with verified results. Every single trade I've taken has been put in Discord alerts. I've shown every entry and exit. Not only that, I have showcased my trades tracker, which is where I track all my trades in the group 4 multiple times. I've also shown my broker history in numerous different trading videos. Whenever I share a trading recap video, I make sure to always show the broker info so that you know that that was a real trade. Not only that, if you want to see all my results, I will be more than happy to send you a copy of my broker reports if you email me at hello@theimpeccableiinvestor.com. I will redact some important info like my account number, if my social security is on there, anything like that, but you will get the trade data. It is very closely aligned with exactly what the historical backtest shows. I've taken almost every trade from the historical backtest. So if you want to know what I've done, just look at that. Okay, next, I have been trading the underlying trend following strategies, which is what I showed at the very beginning on slide 2 or something, which shows you, hey, we trend here, trend down, whatever. I've been following that approach to just trade stocks since March 2018, and have been able to consistently outperform the market. So I've been doing this for almost 5 years now with stocks. Only recently have I switched to credit spreads, but I've been using this approach for 5 years now. And this approach that I developed is based on the turtle traders, which were able to create hundreds of millions of dollars for people who didn't even know what they were doing in the market and were taught simple trend following systems. So this system does work. Next, I've created a software for this trend following system called the Impeccable Stock Software that has helped over 10,000 traders. 10,000 is just what I say. It's actually closer to 20,000 now. Other traders easily predict stock trends and profit. All right, if you have any more objections, objection number more, send me an email at hello@theimpeccableininvestor.com. I would love to address it, but this is a really important concept. At the end of the day, remember this. This is so important. At the end of the day, remember this. Please remember this before you ever message me. Overthinking and overanalyzing will prevent you from trading and actually seeing real results. If you are being hung up on every small detail, on not understanding options fully, you just need to commit. Guys, spreads are just simply placing a bet that'll stay above a certain level. If you start trying to get into the weeds and specifics of it, yes, it's good to, but if you allow that to stop you from trading, stopping you from following alerts, stopping following high probability win rate trades, then that is going to affect your win rate more than these small, tiny details you are concerned about. So remember, overthinking and overanalyzing will prevent you from seeing the trading results that you actually want. So please don't let this weigh you down. I am taking care of all the math and the numbers so that you don't have to. All right, there is no perfect trading strategy or system. So again, if you're looking for a holy grail system, 100% win rate, unflawed, whatever, that does not exist. I have spent so much time every single day perfecting the strategy, making it better, looking at your feedback, making it better. And again, it's still not without flaws, but it's the best it can be at this moment. It will continue to get better over time. But one thing I do want to say is, although there is no perfect system, I truly believe that this is the best credit spreads trading algo on the internet right now. But at the end of the day, this algo should be judged on the results it can help others get. Here are 6 case studies. You can click down below on this video or go to app.10%creditspreads.com/case-studies. You can go read about how all these people have made over 15 winning trades in a row, have grown their account by at least 10% in their first month, and so many other accomplishments. Some traders up around 30 trades and they've only lost 2. Some traders who have made almost $30,000 so far. Again, these are real life case studies of them telling their stories about this program. Not only that, I have so many profit reports from our Discord you can see here. Let's highlight some. This person said, hey, I'm up 54.3% just following this algo. That's $8,700 just following this. And he says, guys, look, he says, for me, it also is taking another hit coming on. Okay, whatever. My only guess is the only problem now is that the market is so green, there really aren't any good trades. Anyways, okay, Server Jeff here. Great job. I'm in the same boat. I started with 3K, now at 6.5K. Do you know what that means? It means using this algo, he's doubled his account. All right, this one's got to say the program is really working. Thanks for putting this algo together. My portfolio is up 41% since 4/4. It's only been 2 months. Literally 40% in 2 months. That's insane. Okay, this one right here. Today, I managed to take to look at my transactions. Even with 2 losses, I managed to have a 10% gain for the single month. Guys, do you see that? With losses, he's still making a 10% gain in 1 month. That's what most people strive to make in a single year. That's insane. Right here, I've grown my account by 103% since March. Thank you. 41 trades, 38 winners, 3 losses, all because of this algo. It's not perfect, but it's sure very close to it. All right, if you want to learn more, you can click down in the description and make sure to sign up for the announcement. This algo is closed and only opens for 4 days a month because I like to spend the rest of the month dedicated to helping my members succeed as credit spread traders using this algo and mastering the system. So because of that, it's only open for 4 days. It is opening very soon. It's opening July 27th and closing July 30th. So if you would like to get access to this or at least learn more, click the description down below. Remember, I'm worrying about the math so you don't have to. I hope this explained some and answered your objections and gave you more insight. But don't worry about it. Trade high probability setups. Remember the long-term positive expectancy formula and you will be good. All right, guys. See you in the next video.